Hi, how's everyone doing? I hope everyone's doing well. I just want to say happy Thursday to you. I hope that you're all well and safe. And I just want to come here today just to say thank you for your subscriptions as well as your comments. I've really appreciated your feedback as well. I really do appreciate that. And I'm just so blessed to be able to be here to spend this time to talk to you about one of the things that really is important in business, and that is how do you pay your staff members? Excuse me, just drink my tea. How's everyone doing today? Right. So today is about, excuse me about my cough. Today is about how invoice factoring finance can pay your staff wages on time. Because there's nothing worse than having a business and your staff have gone out and you haven't been paid on time by a supplier. Sorry, from a buyer or a supplier, for example. And that can leave you in difficulty with your cash flow and also paying your staff as well. So today's video is about invoice factoring finance. It will help you in so many different ways, and I can't talk highly enough about this because it is something I truly believe in. Now, when your business is growing in your healthcare business or any type of business, you're just look at it this way. For 1 month you've invoiced for that month, but you're not going to get paid for it until 30 days later. But then in that 30 days later, you've actually increased your hours. So you're doing more work for the invoice that you've just invoiced for. And imagine that you're paying your staff wages weekly or bi-weekly, for example. So what can happen there is that you could end up growing too fast, that it doesn't meet the needs of the 30-day invoice. And that is where invoice finance can be really helpful for any type of business as well. Now, when you're looking at your staff members and you've got these invoices that are outstanding, for example, and then the client hasn't paid you, it could be a month, it could be 2 months that you haven't been paid, it could be 3 months, 4 months. What do you do in that situation? Of course, yes, you stop the service, but that doesn't help you when you haven't been paid. Where are you going to get this money from? Thin air? Or you do invoice finance and factoring, and you can usually do this when it is business to business, i.e. government organizations, care homes, for example. And this works really well in this particular situation because there is nothing worse, like I said, than you've got no income to pay the wage that's coming in for that week, and yet you've increased your hours. So the invoice that you have invoiced for a month later isn't part of the new invoice that has been increased, and your agency staff are getting paid weekly, for example, or bi-weekly. Also, you could get it where a client just cancels and that income that you was relying on is no longer there, for example. So there's multiple ways and reasons why invoice factoring comes into place, because whatever it is, it will help you to pay your staff wages, for example, as well as your cash flow. It will also help you to pay for bills and things like that. So it really does help a business. And today's video is what I'm going to be talking to you about: how to do invoice factoring and finance, and how it helps to pay your staff wages, but also helps with your cash flow. It is a great cash flow solution. And yes, they do charge you, because nothing is free. For example, the banks usually charge around about 3 to 5%, for example, which, you know, at the end of the day, if it helps your business to keep afloat, then that's something that you have to factor in and put your, pardon the pun, you have to factor in. But you've got to also look at your rates to cover that 3% that you have to pay, for example, monthly. So make sure that you add that onto your hourly rate, for example, or that is covering for the invoices that you've raised, for example. So maybe you put another 3% on the total amount. Yeah, does that make sense? Obviously VAT is VAT, you can't, there's nothing you can do about that, but you put the 3% on top of that invoice so that you know what hourly rates that you're going to charge is going to actually cover that 3% or 5% that the banks will charge you for having invoice factoring or invoice finance fee, for example, which, you know, we have to pay. Okay, so I'm going to go into this training with you, this course with you, free course. And what I want to say first of all is thank you and welcome to everyone that's here on the live stream and even watching the replay. I really do appreciate your feedback. And today we're going to dive into the topic about critical things that a business owner needs to be aware of, and especially helping you to manage your cash flow, because there's nothing worse than you being stressed. It can actually make you ill. It can actually cause inflammation in the body. It can cause illness if you don't get your cash flow ready for when you've got orders coming through. Because like I said, there's nothing worse when you haven't been, for example, it could take 3 months before you get paid for an invoice. And then how are you going to pay for things, for example? So bear that in mind. So this is a really good solution, and we're going to be exploring this in depth about how invoice finance can help your business solve the cash flow that you may be experiencing, which is causing you challenges right now. And it will also ensure that your business runs smoothly. You know, just not having that problem anymore of cash flow. So before we get started, I would love for you to hit that like button, subscribe if you haven't done so already. If you're excited about learning about how invoice finance works, then feel free to reach out to me, and you can book a free appointment as well. You can also, you know, put a question in the comment section and I will look to answer it. I'll probably do a video on it if there's enough questions, for example, but I'll cover your question anyway, whether it's 1 or 2 or, you know, 4, for example. I will answer that question. So just a brief introduction. In case you don't know who I am, I've been in business now for 40 years. I've been in healthcare business now for 35 years. And I want to help you to optimize your finance. So I've been trying to do these trainings. Well, I'm doing them every day. You notice I'm on here every day on YouTube because I think it's the perfect platform for this. And I also specialize in helping companies like yours, for example, with cash flow issues, and like today, for example. And I'm excited to share a powerful tool that helped companies like yours in business to run smoothly. And it's called Invoice Finance. It can also be known as invoice factoring. It can also be known as debt factoring or debt invoice, for example. You know, sometimes there's angels as well that can lend you the money as well. But I'm just showing you this because this is something which is quite straightforward. You can apply online, you can get a quote, you can go to any of the mainstream banks if you want to, but type in, for example, if you're in the UK, Barclays Bank Invoice Finance, Lloyds Bank Invoice Finance, NatWest, HSBC, major banks are doing this. Just like in America, they've got ADP for payroll and things like that. So there's plenty of things out there that you can use to help you to pay for staff members. But you've got to ensure that those invoices are paid on time, because if those invoices aren't paid on time, it can literally cause a block in your cash flow in your business, literally. So I'll give you an example here. So for example, you've got invoices outstanding, say 30,000, for example, and they're 3 months old, where the client hasn't paid for months and months and months, but yet you've got staff members to pay. So what do you think the cause and effect of that is going to be on your business? It's going to be a detriment, isn't it? Because it's going to affect how you pay people that are doing the work. The staff members in your office, they're working, they're there working the hours. And sometimes, for example, they're actually doing more hours than what they're actually being paid for. But yet they're not charging you for it. So that's something that you need to also be mindful of. So I'm going to explain the scenario here. So you got invoices for 3 months, they haven't been paid for 3 months, and you've got your bills to pay, you've also got your invoices to pay, you've got your staff wages to pay, for example. You've sent the invoice, but they haven't been paid. So it then leaves you in a very difficult situation. It can kill a business, literally kill a business. So in this scenario, if it is business to business, you're then allowed to you can go to your bank, tell them what the situation is, and then they can allow you to get invoice finance factoring. But they will not pay invoices that are 3 months old. They have to be current ones before 3 months. They don't pay invoices that are 90 days old. So if they have given you, if you've invoiced and they've given you, say, 90% of that invoice, which is now 90 days overdue, and you then raised another invoice for 30,000, for example, then guess what's going to happen? They will hold 90% and only give you 10% because you've got invoices that is 90% overdue. So I'm just telling you the real stories as well, so that you're aware of invoice financing, for example. It is very good, don't get me wrong, but your duty as a director is to constantly chase those invoices. You have to be literally on the phone every day, because it's about your cash flow. Because if you can't pay something, so if that client or those clients haven't paid you, for example, then that affects the business, so you can't pay the bills that you have, and that includes your staff wages or the bills that you have for the business. So it's important that you chase up those invoices. And sometimes a client will argue to say, well, for example, oh, it wasn't done. So you imagine you've sent a carer to go and do work in a care home, and they've been going in there for a month, for example, and the client's not paying the invoice every month, and you're still doing the work and you're not being paid, and then the bank puts a block on that invoice. So then you have to literally, you're the one negotiating and talking to the client, for example, to get this invoice paid so that you can pay your staff, so that you can pay your invoices, so that you can pay your bills. You can't just, when you've been running a business for a number of years, and this is why it's important when I talk about creating the crisis fund for this particular reason, for if this was to ever happen to you, that you need to have that protection, because you just never know. People can turn around and just not pay you, and then that leaves you in a situation where you're not able to pay your bills because of the cash flow, for example. So this is one of the sides of invoice finance, factoring, etc. But it has to be business to business, for example. It can't be business, i.e. me, to a client, for example. It's not going to work. And they also can do credit checks on that business, for example. And if there's like something there, then they could possibly say, well, no, we're not going to do the factoring agreement, for example. So the good side of it is that it is cash flow, but you've got to chase those invoices. Now you remember, or maybe you don't remember, but in my video, previous video, I talked about how I literally used to drive from Worthing to Hastings for about an hour, hour and a half, every Friday, for example. Actually, it was a Tuesday, every Tuesday and a Friday, delivering the invoices. And do you know why? Because I wanted to ensure that they received them, and I wanted to ensure that they were being paid on time, because there were invoices like 50,000. So I couldn't just leave it to chance for them to turn around and say, well, actually, I can't see it. Can you resend it? I'll check my junk. No, I can't see it in my junk. Oh, I passed it on to this department. Call that department. So you don't want a situation like that when you're invoicing for large amounts of money, or for any money. You want your money to arrive on time, because that is the reason why you're in business, so that you get paid. It's not a charity. Unless you are a charity, that's a different thing. So this is the reason why, like I said, I used to go and drive literally and hand deliver the invoice, because, you know, sometimes I would hear the story, oh, I can't see it, can you resend it? You resend it, and then it takes ages to get hold of them. It could take 2-3 days, for example. So then it leads into another week that you haven't spoken to that person. Look, I'm here to give you the good side and the bad side, okay? So I'm just giving you the facts of what can happen, the scenarios. And I want to be able to do that to help you to be mindful of this. You're the business owner. You're the director. You have to literally either drive down there and just hand deliver it. And you get to meet the people as well that you're working with. Build a relationship. Take them a coffee during their break. Say, hey, I've got your coffee here. Oh, and here's the invoice, and they'll open it, and you're sitting there, and they're like, okay, yep, they looked at it, yep, that's fine, great, excellent. Is there anything, because, you have seen it, but I'm just making sure that, is there anything that you want to ask me any questions about? Are you happy, for example? Is there anything that we can help you with, for example? Okay, so that's a good reason as well, so that you can keep communication open. That's why it's good to have regular phone call conversations, for example, or meetings, so that you keep the communication open at all times. And with regards to the invoice finance, as wonderful it is, it is a good thing to have this weekly amount, this cash flow, so that you can pay your staff weekly and not have to worry. All you've got to do is press a button and it draws into your bank account within an hour, for example, and you've got that money there, so that you can pay your staff members, so that you can pay your bills, so that it helps with cash flow. So it's really good, rather than waiting for this, for people to pay you as and when, and they could possibly turn around and say, well, I don't have the money this month, I've got it next month, for example. So then that puts you into 2 months that you're not getting your money. So that's why invoice finance is very good like that, for example. Okay, so I'm going to break it down for you. I'm here to give you the good, the bad, and the ugly. I'm here to tell you all about invoice finance. It is good, but it's got its pros and cons, okay? So you have to make that decision, okay? But it is a good thing. It's just, there's a percentage, and then you've got to then also make sure that they've received the invoice for the ones that have received it, for example. So it is a powerful tool. It can help your business run smoothly. And, I'm talking about where we are today, okay? And that you can always reach out to me. If you've got any comments, you can always reach out regarding invoice finance. And I will answer the question here in a live, for example. So some of you may know or may not know, what is invoice finance? So invoice finance is exactly what it says. It's where the finance is a way for businesses to get paid faster for the work that they've already done, instead of waiting for a customer to pay their invoice. Invoice finance, it also allows you to get a advance on payment, which is really good. So you've invoiced and you're getting paid straight away. You can get paid that day, or you can use it. Only draw down, I always say this, only draw down when you need to. Don't get carried away, otherwise things will run out of hand. And when you need that 10%, for example, then you can't get at it, for example. So be careful how you use this, because it can be tempting, for example, for people to spend all of it, and then there's no rainy day fund for if the invoice, or if an invoice is 3 months or more. So let's dive into it. Let's get into it. So like I said, that if you are waiting for a customer to pay the invoice finance allows you to get an advance on your payment. So there's types of invoice finance that you can get, for example. I'm going to cover 2 main types of invoice finance. So there's invoice factoring, and this is where finance companies collect payments directly from the client. For example, you draw the invoice, you draft the invoice, you send it, you upload it onto your factoring dashboard, usually like a ledger thing. You can see it online, see how much money that you've just uploaded invoice wise, and it will tell you how many invoices that you've just uploaded, how many is outstanding, what the amount is. They'll also tell you what the availability is that you can draw down as well. But there's also invoice discounting. This is where you keep collecting the payments, but the finance company gives you the funds up front. Both of them are, I've used both of them, and they seem to be very similar, but there's one whereby it stamps the invoice. For example, like invoice factoring, they'll stamp the invoice, send it to the client, and they will say in that invoice that this invoice belongs to the bank or whichever factoring company it is, because there's lots of factoring companies besides banks, for example, and that this is the sort code account number or IBAN number that you're to pay, SWIFT number, routing number that you're to pay, and you must pay us directly. You do not pay the customer. This is a legal agreement and you must pay us directly. Whereas with invoice discounting, where you get to collect the payments because the bank has given you the money, for example, up front, but you've got to pay it back. So each option, it has its pros and cons, and I'm going to break it down for you in this class today, for example, this YouTube live. But I want to explain to you why invoice finance is useful. So, would you use invoice finance? Many businesses do, because they face cash flow gaps when clients delay payments. This can create real problems that you need to pay your staff wages on time, purchase inventory, or just keep the lights on. Invoice finance bridges the gap. So allowing you to access funds as soon as your invoice is issued without waiting weeks or months for your clients to pay. Sometimes it's months. When I say months, I mean like 4 months, 5 months, 6 months. So this is the reason why it is good in one way, but if it's over 3 months, then you get into trouble. There's a block there, for example. So how does invoice finance help you pay your staff wages? Well, let me talk to you about the real power of invoice finance. It helps you to pay your staff wages weekly, bi-weekly, monthly. Every business needs cash to cover payroll, but many small businesses struggle when clients don't pay on time. It's a real struggle for small businesses. I've been there myself. It really is. So let me give you an example. Imagine that you've just completed a project and the client agrees to pay you in 30 days. They've made an agreement to even pay you monthly, and you're doing the work, for example, but payroll is due in 10 days and you need that cash to cover employee salaries. So what would you do in that situation? So this is where invoice finance steps in. And with invoice finance, you don't need to wait the 30-day period or more, for example. You can just get up to 90% of the invoice, and this is the UK I'm referring to, upfront, ensuring that your staff get paid on time. And America also has this facility as well. Most companies, most organizations use this as a good way to get cash flow in, especially when you're paying payroll weekly or every 2 weeks, for example. So I've worked with clients that have used invoice finance to avoid missing payroll deadlines. One of them was a small business, and I'm going to explain that it was, they were struggling because people were paying late, for example. It affected them, it affected their business, and they had lots of hours coming in and they were increasing, but the money wasn't coming in fast enough to pay for the staff wages or all of the staff wages and to keep the operations moving. So they had to take a step forward and do invoice finance. And it's quite simple really to get started, and it takes probably about a week, 2 weeks to get set up. It really shouldn't take 2 weeks, it really should be within that week. But your partner is a finance provider, so you'll be submitting your outstanding invoices to. So the provider will advance you a portion of these invoices, and then you, the provider, pays it back when the client settles, for example. So for example, if the bank gives you 90% of that invoice and then the client then pays all of the invoice, you then get the 10% on top, but obviously you pay a fee and that just gets taken out. But it is a good cash flow thing. That's why working with business to business is a lot better. This is the only way that this can work. It won't work with business to customer, for example. So now I can imagine that some of you think, yeah, this is great. You may be using invoice finance or factoring right now. I'd love to know in the comments whether you're using invoice finance or invoice factoring or ADP, whereabouts you are in the world. What do you use? Is it working for you? Is it helping you to manage cash flow, to help you to pay your staff? I'd love to know. I'd love to hear it from you, because I'm looking at this live today is by me talking about this, but it's also good to get your feedback as well. So do you have a specific question about invoice finance? Because it does work in different industries or situations. So say, for example, if you were in construction business and you were doing work for a company, then you can use this. But if you're doing work for an individual, like a consumer, then that's a different thing. You can't use invoice finance for that reason. So you may have a roof that you've just done and you haven't been paid for it, but yet you've got your labourers waiting to be paid. So it all depends with who you're working with. That's why they get the money up front, so that they can at least pay half, for example. So some examples that I've just given you. What I'd like to also say is, with regards to invoice finance and factoring, it is a good thing to have. I will say that, but there are some downsides to having it as well. So I wanted to be up front with you, just to give you the information. I'll just drink my tea, 1 second. It's the thing when you talk, you kind of get, your throat gets dry. And then you've got lighting that makes you a bit dry as well. So apologies for that. So invoice, finance and factoring. Would I do it? Yes, I would. If I could, I would. For you, it would be a good reason for you to do it if you're paying staff weekly, or even every 2 weeks. or even monthly, because people don't pay when they say they're going to pay, for example, for whatever reason, and that then puts you in a difficult situation. So if you've enjoyed today's session, I would love for you to like and subscribe if you can to the channel, so that you get tons of other content on business finance, because I'm going to be covering a lot about, even though I'm not a finance broker or I'm not registered with the Financial Conduct Authority, for example. I'm just talking to you in general about how my clients have found it, as well as how I've found it. If I've used it, I will talk to you about what I've used, for example, because it will help you to grow your business, and it will also relieve the stress and pressure from you, because there's nothing worse than, you know, you've been in business for years, for example, and some of you are paying a registered manager, and you're doing this work, but this person may not be paying you on time. So you've got to look at who your customers are. Move and switch if you can. Yeah, there's the private clients, for example, which is great and wonderful. I'm not saying to not do that, but you need to have business to business so that you can do these invoices for example, because you need to protect yourself as well. Don't rely on 100% consumer, because that can be a problem for you as well. So think about that balance. You know, I always say that the 80-20, then make sure that that you've got clients that are reliable and that are going to pay you, for example, and that you've got a relationship with, for example. So I'd love to know how you're getting on with your invoice finance, with your invoice factoring. How is that working for you currently at the moment? Because I've explained some situations to you, for example, and that's the reason why I used to drive for an hour and a half every week, delivering, literally hand delivering invoices, because I would email and I would get a lot of, oh, I haven't received it. Oh, can you resend it? Oh, can you resend it? And it's like day after day. And then next minute, you're in 5 days. And you're like, hang on a minute, you haven't even looked at this invoice. And it's now 5 days and I'm expecting to be paid on day 30. So you really, directors, you really need to make a decision as to how aggressive you're going to be with chasing payments. You have to be aggressive with chasing payments, because it can kill your business, literally kill it dead. So that's the reason why I used to drive to the clients. They were the government organizations, for example, or the care homes. I would drive to them, for example, and I would hand deliver my invoice to them, so it was there. And sometimes I would sit with them, have a coffee, because I'd bring them a coffee. Depends who it was, for example. Obviously, if it was like, government organizations, yeah, sometimes I could sit down and have a coffee with a commissioner, for example, and I've just handed them the invoice, for example, and they open it up and just have a chat about some of the clients, for example. It's not just about the invoice, it's about meeting with them and talking with them and seeing if they can give you any more work and building that relationship up. So this is when really you as directors, you can get out of, maybe you're at home all the time in your office, you can get out of your office, get some fresh air, and get in your car and just drive around and drop the invoices off rather than emailing them. That way you're getting fresh air, you get to meet people, and you may drive past and you may go in and they may go, oh, you know what, I need someone tonight. Oh, do you? Oh, okay. Yeah, I'll get on the phone right now. Yep, they can come tonight. So think about that option. Imagine if you're going around delivering your invoices, which is what I did in the end, because it was getting ridiculous, because I kept calling and saying, did you receive it? No, I haven't received it. Okay, or yes, I have received it, I've passed it on to this department, and you ring this department, then they say, no, I can't see it, it should be here in a couple of days, and then you're like, okay, let me wait a couple of days. Then you ring back in a couple of days and you say, did you receive that invoice? No, I still haven't received it. So then I used to get in the car. That's what I used to do, because I thought, if I carry on like this, is going to end up being 40 days payment, not 30-day payment, because 10 days is sorting out who's got the invoice, especially when you're dealing with larger organizations. So just bear that in mind. And it's nice to get out from, if you're stuck in your office, it's nice to get out and meet people as well. Meet the people that you email instead of, picking the phone up, talking to them. You can see them face to face and give them the invoice and just talk about, the clients that you're working with, for example, for them. For example, if there's any issues, for example, it can be discussed right there and then, for example. And when you think about that, I even also did it with my private clients as well, because, back then they didn't have email anyway. So I used to hand deliver it instead of posting it, because I used to like meeting people. And I'd say, how was your care? Was you happy? How's the carer doing? Great, yeah, I'm getting on really well. I'm not saying I'd be spending like, an hour with them. I'd spend about 5-10 minutes just delivering and talking for 5-10 minutes with the client, and they get to know you, building up a good relationship with them as well. And whenever they need extra care, guess who they're going to go to? They're going to go to you, because you're the one that's going to help them, for example. So let me know that you enjoyed that. Thank you for your like, by the way. I really appreciate your like and your likes. I do want you to be aware, if you do want to get factoring or invoice finance, for example, then approach your banks, or you can go online and you can even do a simple type in invoice finance Barclays if you're with Barclays, if you're with Lloyds if you're with Lloyds, NatWest if you're with NatWest, if you're with HSB, and there's all different types of banks that do it. But there's also the other organizations that do it, like there's Bibby Finance. Are they still going, Bibby Finance? Let me just check before I say that word to you. Because they may not, because I haven't heard that name for ages. Yeah, it's still there. It says Bibby Finance. Bibby Financial Services. So see it there. It says Bibby Financial Services, for example. So there's Bibby Financial Service. There's loads. There's hundreds. There's even angels that will come and give you the money. Literally, if you've got invoices, they'll give you the money, and they'll possibly say, right, okay, I'll give you this, but pay me back, and I want this percentage from you, for example. Literally, there's plenty of different organizations that do things like that, business angels. So there's quite a lot of options that you can have in order to pay your staff, in order to have your cash flow, so that you get paid on time, because there's nothing worse than customers not paying their bills, and then you're the one that is struggling as the business owner to try and see where you can get this money from to keep the cash flow going and to pay. So I hope that that's been very helpful to you. Now the process usually is when you do invoice factoring finances that you have to fill out an application form, you have to provide the information, you've also got to provide the proof of the contract that you've got with the organization. For example, terms of business is fine. Also there's the invoices, so they want to see a copy of the invoices, or maybe you give them a copy or upload the copy, scan them, and so they can see that, you know, that these organizations do exist with you providing the service to them, because they don't want anyone to try and pretend. So they need to see that evidence. And what happens is, it all depends who it is you're dealing with. They will also email or they will reach out to the organization to say that they're taking over the invoices and the payments must come to them. You will see a sample of our invoice here. It's stamped, for example. That is to say that you must pay our company, for example, instead of the company that's delivering the service for. But directors, it is your duty to chase up your invoices, for example. And I know it doesn't seem nice, but what do? You can't leave it, can you? So, because, you know, it's not fair. If people don't pay you, then it's not fair on the business, and it can cause great difficulty. So you chasing those invoices, you're doing it for a good reason. It's not because you're doing anything wrong. You're allowed to do that because the work has been done. Now work is work. How good someone does something is in the person's... You see, people don't realize beauty is in the eye of the beholder. So whatever you think could be different from the person who's doing the work as well. So it's also about the work was done and you're being paid for it, because that's only fair to do so. Because otherwise that will leave you in difficulty. So, like I said, there's plenty of factoring company, finance companies that will help you with invoices if you are working with government organizations, care homes, for example. You can get invoice finance through that. Even home care, when you're dealing with government organizations like the integrated care boards, the commissioners, the home care, the departments, the cities that you're in, for example. So there's lots of different ways that you can get invoice finance, providing that it is for a business that has been credit checked, for example, and that they know is reliable. So check out, do your own research on it yourself, but do check it out, because it is a good thing. Even though there's the bad side, there's very much a good side to it. So you've got to weigh it up for yourself. And I say go for the invoice finance factoring. It's up to you, but you do need to have something like that that's going to help you. And I'm not saying that you have to submit all your invoices through there. You know, you can submit your invoice that you need to submit, but it's always good to submit when you've done the work so that the money comes in quicker, in order to prevent a block, in order to prevent a stop in you getting your funds. So thank you so much. This is Christine Crowell, and thank you for being here today. And I look forward to the training tomorrow, which is on AI tools that you can use for your healthcare business or any business, tell you the truth. That's what I'm here for, is to help you to grow and to talk to you about these things, because there's different stages, like how I said, you've got to do the application stage. Then, well, first there's the quote stage, then there's the application stage with invoice finance. Then third, there's some questions, you got to upload some information, for example, and they will ask for a ton of information, for example. And then, because they've got to ID you and check the company and all these things, your passport, insurance, etc., etc. Then once all that's been done, usually it takes about a week, and then they'll let you know whether you've been successful or not, for example. But as soon as you got your first invoice, that's when you should, well, do your inquiry now so you know who you're going to go to first of all. Don't wait until you got an invoice, then it's like you're panicking and you're jumping at the first one. Do your research now, and then when you got your invoices, you then take it to the organization that is going to give you the income that you need to help you with your cash flow. So that's part of that stage with factoring, invoice finance, that I've explained to help your cash flow solutions. And have a wonderful, wonderful evening. Stay blessed, everyone. Take care. Thank you. Bye.